Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Juana.
We're going to talk about zombie foreclosures.
Woohoo.
They are on the rise. This is an article that Juana sent me with the title, in the email she sent me said, it's very clickbaity. and it indeed is clickbaity because it was like, Juana, we're literally experts at foreclosures. We have done over 3,000 bank-owned foreclosures. And then we're like zombie foreclosures. Like, what are they talking about? So we did read the article and see what they were talking about. We're like, oh, okay, they made up a name. But anyway, before we dive into this information, what's our 48-hour deal that we have with all of them out there? What's this 48-hour special deal?
This is like ins and outs. But wait, there's more.
Wait, you get a second one free.
There you go. So if you watch the video within 48 hours of Todd having posted the video, then it will not have any commercials. After 48 hours, Todd may or may not remember to turn the commercials back on.
Yeah, just so you know, I am the production team. I do everything. All of everything. Make the thumbnail. I mean, it's pathetic. But anyway, here we go. Okay.
I'm just a comic relief. That's it.
Okay, so this was the first part of the article. Zombie foreclosures are up, and the hardest areas are in the South and Midwest. In the second quarter, 7,329, this is in the whole quarter, of those pre-foreclosure properties, 3.3% were zombie properties, meaning they had been abandoned by their owners, sat vacant during the foreclosure process, according to a new vacant property and zombie foreclosure report from real estate analytics firm Adam.
Okay, now can you imagine this analytics firm actually producing a report that says zombie foreclosures?
And then it says that they analyzed county tax assessor data for under 4 million properties, broken down by blah, blah, blah. Juana, so first of all, before we dive into like serious numbers here, it's only 3.3% of pre-foreclosures were vacant.
Right.
Is that in line with normal level? Like, do you know what the going rate of vacancy is for like regular owner-occupied homes?
Well, I mean, owner-occupied homes technically are not vacant unless people are on vacation.
Well, no, but I mean, there are such things as owner-occupied homes, meaning they're owned, but like no one's living in them.
Right. So like vacation homes, or what do you mean?
No, like just owner-occupied home.
Okay, well,
like a rental home is 6%,
right?
But that's because you have time in between tenants.
You have turnover, yeah.
You have turnover, but rentals are basically it's like in Las Vegas. You're usually generally all the time they're occupied, right?
Right. So like a circumstance under which an owner-occupied home would be vacant, for example, is if you're in between homes, right? You've put your home on the market and you've moved somewhere else and you're waiting for your home to sell, or you're waiting, for something else to happen. So that would be like that. So it's actually really low. But in this case, these vacant pre-foreclosure homes, that's actually a pretty low ratio. And the thing to keep in mind is that they're not even throughout, right? Some areas have more than others, and they tend to be in areas where there is less equity. So they tend to be in the Midwest. The other places where you see a higher percentage of them is in rural areas where there's really less equity, less demand, and maybe the lender doesn't even want to foreclose because then they have the responsibility of dealing with the house. So they may even abandon the foreclosure. And then you have other areas that are, for example, like there are foreclosures like that in Toledo. Well, Toledo is not a small place, but those homes are in transition, and so they will foreclose on them when they're ready to do so.
3.3% of pre-foreclosures are zombies. It's about, the Fred actually tracks this. It's about 1%. 1% of all owner-occupied homes are actually vacant. The largest reason, one, is like you said, people have moved, house is up for sale, and it's not occupied because they've moved. They wanted to move, get their stuff out, and then they would put on the market vacant.
Right.
Okay, here's the second paragraph. Year over year, the biggest 2025 second quarter percentage increases in states that had at least 50. So here's the thing. You had to have at least 50 to qualify.
Okay, but 50 for the whole state.
For the whole state. And there were only 4 states. 5 states. Okay, North Carolina went from 59 to 90 in the whole state. North Carolina is a huge state because it's like 13 electoral votes, right? Iowa, 108. Texas, huge state, 246. South Carolina, 92. Kansas, 89. These are not massive numbers. These are pre-foreclosures.
Right.
Okay. This is funny. You get way down there, and it says, this is deep in the article. Remember, most 95% of people just see the headline and move on, and then they'll tell their friends, I heard there's a bunch of zombie foreclosures happening. Okay. The good news, while it seems like zombies have taken over the real estate industry, the truth is that they account for a very low percentage of pre-foreclosures. And here was a quote. Thankfully, we're not seeing a lot of homes sitting vacant due to pending foreclosures, which is good for families, neighborhoods, and the market. Ron Barber, CEO of Adam One, if you live in a neighborhood and you've got a vacant house that the grass is overgrown and it looks terrible and you're trying to sell your house across the street, is that good for your neighborhood or not?
It is not.
Right. So the reason we did the article, or the reason we're doing the video, is because they try to make a big deal about something that's minuscule amounts of data. And I'm going to put this in perspective. I got two charts here we're going to show you. This is the actual delinquency rate. This is only delinquencies. This is only people late on a mortgage. So you could be 30 days, 60 days, 90 days, any delinquency, right? And if you look at this all the way to the right, and if you want to know what date that is, it's May 21st, 2025. That was the last time that they snapshotted this data. And it's 1.78, which is less than 2%. And then remember, a very small percent of these actually get foreclosed. We actually have some data to show you. They'll give you an idea of what that is. But you can see historically we're at or near lows. This goes all the way back to probably 1990, 91. So we have very, very low people late on payments. Why is that? Why would so few people be super, all caught up with payments?
So most people have payments that they can afford.
Why are they?
Relatively easily, because they have low interest rates. They've had their mortgages for a while. Their mortgage payments are probably on par or less than rent payments would be. So people are in a good position to afford their homes. The people that have 6% and above interest rates there are very few of them, but remember, these are people who have gotten a loan recently, which means that they are well-qualified buyers, because it's gotten very difficult to get a loan because lending standards are very stringent, because lenders want to make sure that people can afford their homes, and it's a good experience for everyone involved.
What this chart is, or what this table, it's a table actually, this is the Southern Nevada foreclosure total. Now it's for the whole Clark County. It's basically the bottom half of the state. It's 2/3 the population of the state of Nevada. So, and what we're going to focus on is just Las Vegas, that little purple, pink line. Okay, now all the way on the left it says notices default, and we'll just start with the year numbers. This is the preceding 12 months. There were 609 NODs filed. Okay, now notice of trustee sale is what happens 28 days before a foreclosure, so 4 weeks to the day out. There were 345. So you can see from NODs wanted to trustee sales, roughly half felt roughly half of them get caught up, sell, something happens, right? Notice trustee sale 345 down to trustee deeds, which is the foreclosure sale, only 103, so more than a third. So basically a sixth of these only end up at the actual trustee sale. Sure. So some of these states where it was we have 50 or 90, whatever, it's only going to be 9 or 10. Maybe at the end of the day of these vacant homes that actually end up getting foreclosed. And I'll give you a perspective about this for Las Vegas, okay? 103, so you can see it says current month 10. That means the last month. And so that means 1 every 3 days. We have 400,000 houses in Las Vegas proper. If I told you, drive around and find the foreclosure that happened today, you wouldn't be able to find it because there's a 2 in 3 chance there wasn't one that day. And if you see trailing 12 months, 103, we had days when there were 80 sales a day at the trustee sale, lots of days. We know because we were down there buying properties to flip, and it was just a bidding frenzy. There were tons of people down there with cash just trying to get these properties. And now you go down, there's almost nobody down there. In Vegas, there's about one home sold at the trustee sale every 3 days. And this includes when the bank takes it back. This is not just purchases. This includes if the bank takes it back. It's literally zero. It might as well be zero. These numbers are like nothing, pretty much. So the foreclosures are not an issue. I don't know why there's this fascination for these news sources to keep doing the foreclosure videos, because all they say is foreclosures. Oh, they're up 3%. Well, but they're at lows. So if you had 100, now you have 103, you're up 3%, but that's not really, doesn't mean anything.
Right.
What's the fascination?
I think it's clickbait.
It's super,
It is.
super clickbait.
And clickbait now means more than just clicking with a mouse, right? It means changing channels. It means changing platforms. So it's just things that people will spend an extra split second reading and then moving before they move on.
And it forces you sometimes to watch YouTube videos, which we're not forcing you to watch. If you watch our video in the first 48 hours,
there you go.
get away from the videos.
You're talking about the commercials, but yes.
Oh, I'm sorry, the commercials, yeah. Sorry.
Okay.
All right.
Are we good?
Yeah, we're good.
Okay. So hope that was fun. Short, sweet, and to the point. If you have real estate related comments, we welcome them. Please leave them down below. Remember to like the video, subscribe, hit the notification bell, share the video, and we'll see you on the next video. Bye.
Bye.